Hello, and thank you for joining us at xm.com for the weekly outlook. This coming week has very important data releases, of course, central banks as well. I'm Cristina Marujos, and joining me in the conversation today to explore the week ahead is investment analyst Marios Hadjikyriacos. So, Marios, let's start by looking at the U.S. We're expecting a lot of important data, with a highlight being the jobs report on Friday. The numbers expected are quite optimistic, despite recent signs that the recovery is losing steam. So, do you think the data can help the sinking dollar recover?
Hello, Christina. Well, let's put it this way. Even if the data help the dollar to rebound, I don't think that any recovery will last very long. Lately, we've seen the dollar literally being unable to get off the floor. So even if we see a rebound on encouraging US data, I'd expect the overall downtrend to resume before very long. But let's explore the actual data first. We'll get the manufacturing index on Monday, the non-manufacturing index on Wednesday, and the week will end with non-farm payrolls on Friday, which is definitely the most important release. Now, here's what I find interesting about the NFP. Non-farm payrolls are expected to have risen by another 2.3 million in July, and the unemployment rate is expected to fall quite substantially. One might ask, we've been reading all of these headlines about the US recovery stalling and many states rolling back their reopening plans and so on. How is the labor market still recovering so powerfully? I think the answer lies with when this data were collected. The US Statistical Agency collects the data for this survey in the second week of each month. And the second week of July was still, infections were rising, but it was the period when not every state had rolled back its reopening plans. The recovery was doing more or less okay still. So I don't think this data will reflect the slowdown that other high-frequency indicators have told us lately, and therefore we might see them supporting the dollar a little bit. Now, overall though, the biggest variable for both the dollar and stocks will be what Congress does. We are currently in the middle of negotiations about the next stimulus package. A lot of crucial benefits have already expired, and we'll probably get a deal between the Democrats and the Republicans eventually, probably before the end of the week, because too much is at stake. No politician wants to take the blame for ruining the recovery, especially ahead of an election. So they will reach a deal, I think, but the longer we go without a deal, I think that the markets could become a little more nervous about this whole prospect.
Now, this week also has in store important central bank meetings, and one of them is the RBA, which concludes its policy meeting on Tuesday. Australia's economy seems to be recovering, and the Aussie is flying higher. So what do you think the RBA policymakers will signal this week?
Well, indeed, Australia's economy is doing much better. The latest data are suggesting the recovery is going very well, that the recession wasn't as bad as the RBA feared initially. Now, does all of this mean a more optimistic tone from the RBA? I don't think so, and the main reason why is how infections have been developing in Australia lately. This week we saw a record number of daily infections and deaths, unfortunately, and even though most of these are concentrated in one state in the nation, it's still a very worrisome signal. It suggests that the healthcare crisis is literally moving in the wrong direction, and that, I think, will keep the RBA on its toes, because it's a real threat for future spending and therefore for the overall recovery. So if there's any change of tone from the RBA, I think it could be towards a slightly more cautious message, even though we've seen some improvement in the data lately.
And staying on the central bank meetings topic, the pound has been enjoying a strong boost lately, and economic indicators out of the UK give more room for cheers. The Bank of England meets on Thursday. Should we expect any changes to its policy, and could the BOE clip the pound's wings?
Well, no changes in policy, that's for sure. England is doing relatively well as well. We've seen the pound really soar lately. I think that's a combination of a sinking dollar and of some signs that the recovery in the UK is going better than expected. We've had some encouraging data lately, and there's a growing sense overall that the UK won't be the laggard in this recovery out of the European nations. I think that there are also some positive expectations from Europe, this whole recovery fund and optimism around Europe Europe itself, I think that's spilling over into a more optimistic outlook for the UK, because if Europe does well, probably the UK does well as well, Brexit or no Brexit. Now, I think that's clear because of how euro sterling has been trading lately. The euro has soared, but euro sterling has been more or less flat, which shows you that the market is quite optimistic on the UK as well. Now, as far as the Bank of England is concerned, they will take note of the improvement in the data, but I don't think they will change their policy stance. I think that the message will still be a dovish one. And the reason why is, if you listen to what policymakers have been saying lately, they're still very cautious. Yes, the economy seems to be recovering, but there are a lot of risks on the horizon. We think that those will come back over the coming months, so we don't want to get ahead of ourselves in a sense by sounding too optimistic. Long story short, the Bank of England will probably maintain its current dovish tone, and even though this usually wouldn't have had much of an impact on sterling, given how much the currency has risen lately, I think that the dovish message might be enough for some profit taking in the pound.
Marios, thank you so much for your insights on the week ahead, and thank you for watching the Weekly Outlook at xm.com.